Chase all this bread, though the shit won't last. About to shut the city down like a crypto crash. Stacking my coin, stacking my coin, stacking my coin, stacking my coin, stacking my Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash.
Do it live. I'll write it and we'll do it live.
Okay. Ready?
Fucking thing sucks. We'll do it live.
Oh, buddy. Man, we got a problem on our hands, ladies and gentlemen. FD caused the bear market. I highly doubt it. I love FD. I don't think FD caused the crash, man. We're going to get into it today. Today should be a really good stream because I'm going to break down what I'm seeing in these markets. The price action in the crypto market is concerning. It's not normal. There's some things going on behind the scenes that you need to be aware about. And hopefully I can save you some money and save you some headache and increase your dry powder so you can buy more crypto. Amen. 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 Hit the like button. as you guys come in, we got a very, very interesting show today. All right, we're going to get into it in a second. Again, hit that like button. You know, this is try to give you some free trades though. I think you guys missed another free good trade. For sure you missed some trades from yesterday. You know, my streams, as you guys know, are always powered by the infamous, the one and only. Well, it's not one and only. I've got a few signals, but Bloodalytics.com. Link is in the description below. Jump over there. View the various services we have going on Bloodalytics.com. All right. Primarily, you know, during the streams, I use the Scalpalytics Pro, Bitcoin, Ethereum. That's normally what I'm using. So check it out. No commitment, a great suite of indicators. They're really not indicators, they're strategies. And I tell you exactly where to get in, where to get out. You see it on the live streams. If you're new to the channel, stick around. You'll see it in action. Hopefully today. Hopefully we don't chase trades, though. That's for sure. We do not chase trades, mon frere. So we'll look at Bitcoin Scalpalytics Pro and Ethereum Scalpalytics Pro here in a second on today's episode. It's MEXC, the next FTX. Why do you say that? Anything for clicks? I don't use MEXC, but I have some people that use it. I want to know what's going on. You hearing some rumblings? Let a brother know. Let a brother know what's going on with MEXC. All right. So again, we smoked out today, ladies and gentlemen. Your portfolio is going to get smoked out if you don't take heed to what I'm going to be talking about in today's episode, because we have essentially some rumblings in the repo market. Again, I'll try to break down in layman's terms what I'm talking about, because it's concerning to me. And this is why you're seeing, let me go over to our charts really quickly, our main chart. This is why you're seeing very violent moves. We're getting legs down in the markets, crypto markets. And I'll bring up CNBC as well. And we're starting to see a decoupling. Well, not today. Not today. Not today. Okay, we're back coupled up. We booed up. It's cuffing season, ladies and gentlemen. It is cuffing season, and the NASDAQ is back cuffed up with Bitcoin. All right, NASDAQ down 1.2%, 1.3%, 1.33% down. NASDAQ is today, as you guys can see here on the screen. Stocks drop on rising fear about AI stock valuations. Plantier leads decline. Plantier, listen, this is all, you can't listen to the mainstream media about shit, about nothing. They're always wrong. They have to come up with a reason, and normally they give you the wrong reason. And so this, when you see stuff like this, it makes you say, oh, okay, well, stocks are, you know, stock market a little worried about AI stock valuations. We know, you know, that people are a little overzealous potentially about, but nothing to worry about. Keep on moving, Johnny. Nah. You got to understand, CNBC, more so CNBC than maybe like a Bloomberg, or I would even group Fox News, Fox Business News into the CNBC bucket. They're incentivized to keep you in the market. The more you're in the market, the more they're incentivized to sell ad placements to these different companies. Charles Schwab, Robinhood, all these various, E-Trade, JP Morgan, Morgan Stanley, all these companies, right? So there's a perverse incentive for them to sell you bullshit. Hyben said, just let me know I'm still standing on business that Bitcoin will not touch 99. Nah, bro, I'm telling you, bro, you need to get out before it's too late. I mean, I would. Remember, I'm out. I've been out the market. Been out the market. But $99,000 Bitcoin, bro, you gonna wish you had $99,000 Bitcoin. This bad boy might go to 50,000. And then you add smart man, the smartest man in the room, Mr. Sailor. You add him to the mix. That man may take us down to 30. We might see Elmo again, ladies and gentlemen. I might have to bring Elmo back. We might hit $30,000 Bitcoin, man. I'm telling you, it's that serious. So we're going to get into it in today's episode. Hit that like button, share the stream. As you guys get in here, I got some real detailed information about what's really going on. I don't know if other people are telling you, but when you come to this Crypto Bloods channel, the Red Nugent is going to give you the real. All right. They're telling you on CNBC right now that just stocks drop on AI valuation fears. No, this has nothing to do with AI. Absolutely nothing. And everything to do with the underpinnings of the market. A 2019 event. You guys probably don't remember, but in 2019, the repo market blew up and shit hit the fan. Man, it was about to be done data. Like, if COVID didn't come save us, no coincidences in my book, but if COVID didn't come save us, it would have been over then. So are we going to get another false flag, if you want to call it, to be the excuse to print more money? I don't know. I'm just telling you, shit is back to where it was in 2019 when the repo markets were blowing up. We got a situation on hand today, ladies and gents, and I'm going to break it down, tell you exactly how this is going to affect you in the crypto markets, because it's going to affect you heavily. Wisdom bars in the building. You're gonna get some cheap sats, that's for sure, but probably cheaper than what you think. So cheap you might quit. You might be so cheap you might sell at the bottom, and I don't want you to do that. So that's why I want you to get out now, because it's easier to get out now, ladies and gentlemen, than to buy when the sky is falling. It's always harder to buy when the sky is falling if you're not ready for it. If you don't have a stomach of steel, you're not going to do it. I'm telling y'all, you're going to do the opposite most times. If you're not a pro at this shit, you're going to do the opposite when it's blood in the streets. I mean, everywhere. CNBC, everyone calling panic. You got emergency live streams after 4:30. Remember those days? We had the CNBC, episodes right after 4:30. Markets close. We have another emergency special exclusive. You're gonna get all that. When you see all that, you're not gonna be buying. You know that. So I'm just trying to save you from you. Hopefully. French toaster in the building. Lick a shot. So what am I talking about? Well, first, let's take a look at the markets. Before I get into that, let's take a look at the markets, because geez Louise, man. Very, very concerning. Very concerning. We are now, ladies and gentlemen, and I went over this at the end of October. I said, beginning of the last week of October, I said this is a make or break for us. And I thought we would close October in the green. We weren't too far off. Matter of fact, I believe we were possibly like 1.5% in the green at the beginning of the week, last week, I believe. But let's go to that table really quickly. And I have to just reiterate this for people that are new to the channel. Our observations of October. So we had a red October. That's an alert. That should bring up your spider senses. Red October, down 3.69% this past October. Now, if you look down this column, you only see two other red Octobers, And I again had to dismiss the 1 in 24. That was a totally different market. No comparison. Absolutely totally different market. Okay. So really one other red month of October in what's that? 11 years? You batting 1,000 on a green month in October. However, in 2018, we had a negative 3 and almost 4%, negative 3.8% October, followed by a negative 36% in November. Are we going for the same here in November of 2025? Very possible. Oh my God. I hear you, bro. I hear you. So this is what we have to be very, very attentive to, of the possibility of that happening. Now we are currently 22% away from all-time highs. Can we get back up and move up 22% by December to close out the year in a positive? I don't think so. I think that was possibly the low. That was the top. This was this cycle's top. It's looking like it more and more every day. Okay. It is surely looking like that more and more every day. But you still have a chance to lock in some of those gains from a very good year. If we go back over here to this, Bitcoin, let's see, quarter. What's the return so far for the year on Bitcoin? Anyone know? Okay, year to date on Bitcoin. So we have currently, I'm gonna zoom in a little bit. Year to date, we're at 10% return. So actually a sub, and now I see why people are frustrated. A subpar year so far with Bitcoin. And to be honest with you, this is interesting. I'm glad I brought this up. So far, this is since 2014, guys. This has been the worst year of returns for Bitcoin. Wow, I didn't even realize that. I did not even realize that. Worst year of returns so far for Bitcoin. The next even remotely close return would be 2015, where we had a 34% return. So with 2 months left in the year, ladies and gentlemen, 2 months left in the year. Show me some love over on X, ladies and gents, please. Drop a comment if you're watching on X right now. I need your love and affection. We need to get more people in here. I'm dropping real alpha right now for you. Let's get more people in here so they can see what's going on over on the Red Nugent. So look, with 2 months left, I do not see us essentially, and this is crazy because it all adds up. We would need to do a 24% return just to match 2015. That's going back to all-time highs, essentially. We're 22% away from all-time highs right now. Okay. 22% away from all-time highs right now. So we will essentially have to get back to all-time highs to even break even with the lowest performing month in Bitcoin. Positive performing month. Because we've had negative year returns, 3. Again, I have to exclude stuff like 2014. Okay, I really could exclude 15, but we'll keep it in there. But we've had 3 negative returning years in Bitcoin. Okay. With that being said, we're most likely going to print the the lowest positive returning year in Bitcoin this year, 2025. What does that tell you? What is that saying to you? That means something. That does mean something, ladies and gents. That means absolutely something. The markets are trying to whisper something to us. And what is that? Well, at this juncture, and at the end of the year, we're in November now, going into the end of the year, fourth quarter we're in right now. The headwinds we have right now are the credit markets, the repo markets. No, we're not repossessing your rover. I know we've seen them pull up with ribbons, repo, resold, and redriven. Shout out to Hove. We didn't see them pull up with ribbons, but repo, resold, and redriven. We're not talking about the repo market today, though. We're talking about, we're not talking about the repo man, I should say. We're talking about the repo markets. And this is a image that I have to show you right now that it should be concerning to you. So as you can see, the SOFR, and you might be asking, you know, what is the SOFR? So you guys remember we used to have another acronym called the LIBOR. Remember LIBOR? Any of you guys remember LIBOR? Let's bring up LIBOR. So the LIBOR rate was the London interbank offered rate. Okay, it was a global, you see they're using past tense. I'll explain why in a minute. It was a global benchmark interest rate that represented the average rate at which major London banks lent to one another on an unsecured basis. LIBOR rate basically was the crux of all debt markets. They use that rate as the basis to then, you know, give you like prime, whatever above that LIBOR rate. So that would be your prime for all your debts across the financial system, from, you know, LIBOR rate, I believe, mortgages, you know, car loans, financial price, everything was pretty much, that was the basis. That was the LIBOR rate, then you plus prime, plus whatever, right? If your subprime is going to be a lot higher than LIBOR, but you get the point. I mean, for everything, derivatives, loans, mortgages, car loans, every loan. Okay. Well, guess what? Nah, I wasn't surprised. You shouldn't be either. But come to find out, the LIBOR rate was rigged, ladies and gentlemen. Can you believe it? Can you actually? I can't believe it. Yeah, you can believe it. All this shit is rigged. How it became public, it must have been bad. It must have been bad. Because I want to say, I don't know. Oh, was this after? Yeah, it was after the 2008 financial crisis. So the manipulation scandal involved banks colluding to manipulate the LIBOR rate, basically, to increase profits and hide financial weakness during the 2008 financial crisis. This was achieved by banks submitting false rates for their borrowing costs, leading to significant fines and criminal charges against individual traders such as Tom Hayes. I wonder if Tom Hayes was black. I'm just out of curiosity. I'm just wondering, was Tom Hayes a black man? He was not. Oh, thank God. Thank God. Woo! Boy, I was about to put the tinfoil I was going to pull the black card, y'all. Tom Hayes was not a black man. He was working for Citigroup. Okay. So we no longer use the LIBOR rate, ladies and gentlemen. Needless to say, we no longer use the LIBOR rate. We now use the SOFR rate. SOFR rate is the secured overnight financing rate, which is, that one was created by the US, right? So that's what we're using now, the SOFR rate. So I say all that to say SOFR rates have blown out. Pause. No diddy. They're up over 22 basis points above our, basically, how can I put this? It's 22 basis points above our Fed market rate. Okay, think of it as like a financial system, like a giant complex plumbing system, okay, where cash, i.e. water, needs to flow smoothly every day. So, but right now it's clogged up, man. It's really clogged up. And so that overnight loan is market is having a problem today. It's been going on for really last few days. It started on last Friday, to be honest with you. Okay, in this market, ladies and gentlemen, banks pretty much every day borrow trillions of dollars overnight. It's called the repo market. So overnight, they might need to borrow some funds. They'll pay it back in interest the next day. It's like basically the world's caffeine hit. Like you need that bump. You need to fill some plugs here and there in your balance sheet just for the night until you get the other money from the other person. Basically, you're borrowing, robbing Paul to pay Peter. If you know what I mean, you get what I'm saying. That's basically what this repo market is all about. Robbing Paul to pay Peter every fucking day. And so normally that rate, ladies and gentlemen, normally that rate is very stable. It's normally very stable and controlled by the Fed, by Jerome Powell and his people. But the Fed is losing control right now, ladies and gentlemen. The actual market costs for these overnight loans have shot way above maximum rate. Okay. This is a big deal. It means the Fed is struggling to control the most important price in the entire system, and that is the cost of money itself. Literally, the cost of money itself. So what I think is happening right now, ladies and gentlemen, is you have people having to pull money from somewhere to get liquid. And the first places they're going to pull money from are your most highly speculative places, which is going to be your crypto markets. Then it's going to be equities, certain equities. And then within equities, you got different levels of, speculativeness. But that's what's happening. They're pulling money where they can to fill gaps. And possibly some of these bigger players are pulling money from the crypto markets to fill some of these lending needs they may have in the debt market right now. And this is why we're getting the SOFR rate blowing up like crazy. Almost said, and I took this screenshot last night. It might be even higher. The spread might even be higher at this point, but we're near 2020 levels. That was literally when everything shut down. That was the catalyst for even having a $12 trillion injection of money. That was it. So you're telling me we're back at the point where we had to pump in the most money we've ever had created in the history of America? We're back at those levels. It's some real issues going on in the markets, ladies and gentlemen. some serious issues going on in the markets right now. So the emergency taps are being used right now because cash is getting scarce. Financial institutions basically are being forced to go to the Fed and their quote unquote emergency liquidity window and borrow that money. They tapped it for massive amounts of money. This past week, last week, Friday, Halloween. And so there's a scarcity of cash right now, ladies and gentlemen. Again, because there's a scarcity of cash, organizations, big players, banks, so and so, well, not banks so much banks, but like your bigger players, your institutional players, they are looking for where can I grab cash because it's none out there in these streets. And they're starting to sell, in my opinion, this is my thesis, they're starting to sell Bitcoin. They're starting to sell Ethereum. They're starting to sell these assets to raise cash because there's no cash to out there. It's dried up. It has dried up. There's no cash to borrow. And you know, the government is really sucking up all the cash. And sucking up all the cash. US Treasury is issuing a ton of new debt to pay, of course, the government spending. We just keep going. We're over what, 38 trillion now. So when people buy these, cash gets taken out of what? The system, and it goes to the government. And there's no safety buffer anymore. That's gone. There was a huge pool of extra cash sitting around at the Fed, which was, they call it kind of like the reverse repo market or facility, which is like a place where people can pull a kind of shock absorber. But that pool has now drained to zero, ladies and gentlemen. So we got a huge issue on our hands. So we got a monster under this bed right now, and it's called the repo market, man. It's a real issue. And I don't know how many of you know this, but the Cayman Islands, I forgot this point as I was doing my research for today's live stream. I actually forgot this point. In the chat room, if you want to tell me, I'll wait, because this is a good one. Well, I'll maybe not wait because you'll just go search it. But for the longest, I thought that Japan, China was the highest holder or biggest holder of U.S. debt. Nope. By a long shot, it is the Cayman Islands. I know, right? It's like, huh? Yeah, the Cayman Islands holds the most amount of U.S. debt because they were trying to do this kind of like basis trade spread move. They were trying to play this basis trade where it literally is like they could make 10 basis points on the money. Very small amount of money. 0.1% is what 10 basis points is. 0.1%. Very small amount of money they were trying to make. However, in order to make that percentage be a big amount nominally, guess what they have to do? You have to borrow a lot of money. So you got to borrow trillions and trillions of dollars to make that 0.1% be a lot of money. And that's basically what's going on. There looks like they might have to unwind that basis trade. And because that whole trade is based on essentially the overnight rate, the SOFR, right? But if the SOFR is above, which it is right now, the SOFR has blown out to the upside, as you guys can see in the chart right here. Hopefully, let me see if my screen is sharing it. It's not. Let me share the screen. That yellow line is the SOFR rate. You can't see it, and I'll have to get my big head out the way. that red line or the white line, I should say, is the Fed fund rate. The repo rate, reverse repo, is that red line. At any rate, the yellow line should always be kind of lockstep with the Fed's fund rate, the effective Fed's fund somewhere in that range. It is now above by 22, maybe even more today, 22 plus basis points above where it should be. So you have the country of Cayman Islands having to pretty much unwind. They got to unwind. Looks like they might be unwinding the trade because it now, remember it was a 10 basis point spread, how they were making their money. Now they're losing 12 basis points because we got a spread of 22 basis points on the SOFR. I know I'm trying, it's kind of getting a little in the nitty gritty, but just know that now it went from them making a smooth 10% or 10 basis points, 0.1% on trillions of dollars to them losing 12% on trillions of dollars. So they got to unwind this trade. And that's what I think is happening in the markets right now. Cats are unwinding. Cats are unwinding, ladies and gentlemen. If these trades start to collapse, the funds have to sell a massive amounts of government bonds all at once. This, again, would cause this interest rate spike that we're seeing and create that domino effect of chaos in the markets, similar to what we saw in 2020 and also 2019. So we don't know. It seems like the tip of the iceberg. If you want to be ahead of this stuff, you got to be in the trenches on this type of stuff right here. You got to really be in this trench, because guess what? You go to CNBC. Oh, stocks just drop on fears of AI stock valuations. That's the shit they're going to give you. That's what they're going to give you. Oh, it's nothing. It's nothing, guys. And, you go to, I'm not trying to pick on anybody. You can pick any crypto. Let me go to Coin Telegraph. Let's see what Coin Telegraph is talking about. Or CoinDesk. Let's go to CoinDesk. What are they talking about over on CoinDesk? They're talking about Ripple swell event. They ain't talking about the important shit to get your ass up out of here, ladies and gentlemen, to get to the sidelines. They're not talking about what they need to be talking about. Privacy coins outperform as Bitcoin price nears June low. They're not talking about it, guys. Look at Michael saying. Look at Michael saying. Oh, look at Mike. Mike is not looking well, baby. Do a wellness check on Mike, y'all, please. Do a wellness check on Mike right now, ladies and gents. Good God, he is not looking good right now. For good reason. Because shit is hitting the fan. Shit is hitting the fan, ladies and gents. So that's what's happening right now. If this thesis is true, we are going sub 100,000. Sorry, Hyben. Sorry, buddy. We're going sub 100,000 easily. And we could do a flash crash to maybe about 80,000, 79, 80,000. If people really start to panic. If MicroStrategy starts to panic, Elmo, here we come. Again, having some dry powder is critical right now, because if we do a 50, we dropped a $50,000 Bitcoin, you got to be ready swoop that up, man. You can't be waiting and second guessing and seeing if it's going to go lower. You got to be ready to act. At 80K, you got to be ready to pull that trigger. You got to be ready to pull that trigger. At 60K, you got to be ready to pull that trigger. You can't be scared. If you're scared, go to church. You can't be scared, ladies and gents. So that's my suggestion for you. I don't have any free trades today because we're well into. I'm going to bring up the Bloodalytics signal right now. Scalpalytics Pro. Shout out to everybody trading that Scalpalytics Pro, making that money. You would have pretty much scaled out of this short from Sunday. If you were still in the short on Bitcoin, you would have been out of that. But at least the Ethereum one, you should be looking good because we've re-entered trades on the Ethereum short. We entered the trade on Monday. Nice move down, starting the session on Monday. Took all those profits right there. And starting the session on today, on Tuesday, probably, again, I don't trade during this time zone. That's Asia right there. That's short. But if you trade in Asia, you would have made some more money down right here. However, during the US time zone, we would have initially tried to go long here and took a small loss and turned around and went short right here. Pulled the trigger on that short, and we're knee deep in the money on this one as well. Took 50% of profits right here, and we're still holding on to it. So no trades today. Wild markets. We just broke a new low on the session low on Ethereum. It looks like we're heading lower from here as well. But lower we go, I think, because structurally we got a problem. We got this problem right here. We got a SOFR basis trade blow up right in front of our eyes. 2020 all over again. 2019 all over again. Shit is getting real, ladies and gentlemen. It's getting real in these streets. So make sure you guys stay abreast and stay attuned to, Crypto Blood, of course. Red Nugent, I will be covering this and giving you my analysis on these markets all week. Hit that like button, share this stream, and I'll check y'all tomorrow. Holla.
Yo, it's Crypto Blood, Detroit flow, screaming from the D, knowing what to show. Indicators are wrong point, OG since 12, invested in trade, living life like a pro. I'm Rucker, Jerry, and just Bloods do. Bad motherfucker, but in a good way, boo. Got my eyes on the charts, ain't no time to sleep. Get that money, gotta keep it creep. That's why Crypto Blood, just the toasters on the line. Stacking my coin, got the market on my mind. Bitcoin, Litecoin, Ethereum too. Cash is king, but I'm looking for a new move. I know the culture of the markets like the streets. Got my finger on the pulse, can't nobody beat. I see the trends, I see the flow. Got my strategies in place, you know.
I'll write it and we'll do it live.
Okay. Ready?
Fucking thing sucks. We'll do it live.
Okay.